Hello everyone. So in today's lecture we are going to discuss about basics of accounts, or we can say fundamentals of accounts. Let us assume there is one particular business, or there is one shop, and this is the person who has started this particular business. A person who is going to start the business is called as owner, and the other person is going to be called as business. So both owner and business are persons, but owner is called as a natural person who has got a natural birth, but business is going to be called as artificial person. Artificial means we have created it, it is man made. So there are two persons are involved. One is natural person who is an owner, and the other one is artificial person, which is a business. Now there is one important rule in accounts, that is, whenever you do accounting you should always and always think from business point of view. Whenever you learn this subject you always think from business point of view. What is happening in the life of the business, that you need to consider. What changes are happening in the business, that we need to consider. So whenever we do accounting we should always think from whose point of view? Business point of view. And don't think from owner's point of view. What is happening in the life of the owner is not considered in accounts. So what changes are happening in the life of the owner we don't consider. We consider only those things which is happening in the business. So whenever we do accounting we always think from whose point of view? Business point of view. Yes. Now one doubt will arise, sir, what is the purpose of learning this particular subject? Why we are learning this account subject? There are two main intention, two main objectives, purpose of learning this particular subject. One is to know the financial performance of the business, that is how much profit or loss made by the business. See, it's just like performance of the student is pass or fail. Same way the performance of the business, financial means in money terms. What is the performance of the business? Is that business has made profit or is it business has made loss in a particular period or in a particular year? So one of the main objective of accounts is to find out, is that our business has made profit or loss during a particular period. So this is called as financial performance of the business. Now, sir, how to find the profit or loss of the business? See, it's very simple. Let us assume that I am running one particular academy, coaching classes. Whatever the fees I collect from the student, whatever the money I collect from the student as fees, that is my income. But whatever the fees I collect from student, entire amount I cannot keep in the pocket, because out of that fees collected I need to pay the rent, I need to pay the salary to teaching staff, non-teaching staff, I need to pay maintenance charges and all, electricity bill, water bill. So after deducting all these expenses, what are the remaining amount is being left out, that is going to be called as profit. Let us say totally I collected 10 lakh rupees as a fees from the student, and out of that let us say 6 lakh rupees I paid as rent, salary, electricity bill, water bill and all. So 10 lakh minus 6 lakhs, I am left out with 4 lakh. This 4 lakh is called as profit. Suppose assume that my income is 10 lakh but expenses are 12 lakhs. My expense is more than the income, then it's going to be called as a loss. So if your income is more than the expenses, it is called as profit. If your expenses are greater than the income, then it's going to be called as a loss. So first main intention of this particular subject is to find out profit or loss made by the business. Next, the second objective is to know the financial position of the business. Sir, what is my financial position? Financial strength of the business. How how much our business is financially strong. Let us take one example. Let's say one of your neighbor is having a total assets of, let us say, 100 crore rupees. Total properties or total assets of 100 crore rupees. Let us say he's having bungalow, he's having some Mercedes car, some supercars, some gold, ornaments, diamond ring, and all those things. Let's say the total worth of that properties or assets is 100 crore rupees. So once you find that that person is having a total properties of worth of rupees 100 crore, you cannot call him as a rich person. To identify is he financially strong or not, we are not only supposed to see the total assets of that person. Along with his total assets, even we need to see his total liabilities. On that 100 crore rupees of whatever the assets is having or property is having, let us say he has taken a loan from the bank to buy those assets, to buy those properties. Let's say 99 crore rupees of loan he has taken from the bank. And 1 crore rupees he has invested from his pocket. So 1 crore plus 99 crore. So total 100 crore. And with the help of that 100 crores, he has bought an asset or properties of 100 crores. So it means that that entire 100 crore rupees doesn't belong to that person. Because out of that 100 crores, 99 crore rupees he has borrowed from outsiders, from bank, which he has to repay in future. That is called as liability. The amount which he has to do repayment in future is called as a liability. So out of his total 100 crore rupees, 99 crore rupees, so he has to do repayment in future to the bank. Only remaining 1 crore rupees belongs to him, what he invested from his pocket. That is called as capital. So what you invest from your pocket is going to be called as capital. What you borrowed from outsiders is called as a liability. So 1 crore rupees I invested. I means owner has invested 1 crore. That is called as capital. 99 crore rupees I borrow from outsiders. That is going to be called as bank loan, liability. And 1 plus 99 crores. Total of 100 crore rupees I bought assets, properties. Properties are called as assets. So this second objective is to know the financial position, financial performance of the business. How much our business is financially strong. So to know somebody's financial strength, you should not see only total of his assets. From the total of assets, you need to minus total of its liability. 100 crore minus 99 crore is equal to 1 crore. This 1 crore is called as capital or net worth of the business. That's the reason you might have seen this in the newspaper. They say that Elon Musk has a net worth of this many crores, or Mukesh Ambani has a net worth. They use the word called as net worth. That is total of asset minus total of liability. So to judge the financial strength or financial position of the business, you need to see his total net worth. That is total of asset minus liabilities. So the two main objectives of learning this subject is, one, to know the financial performance, how much profit or loss made by the business. And one more is to know the financial position, financial strength of the business, how much financially our business is strong or weak. That is financial position of the business. So whenever we do accounting, we always think from whose point of view? Business point of view. We don't think from owner's point of view. We always think from business point of view. Our intention is not to find out personal profit or loss of the owner or financial position of the owner. Here we are interested to know the financial performance and financial position of the business. If you want to find out the profit or loss of the business separately and profit or loss of the owner separately, then keep personal expenses and income separate from business income and expenses. So if you want to know only the profit or loss of the business, then business income and expenses should be kept separate from personal income and expenses. So conclusion is, you should always think as if you are an accountant of the business. Don't think that you are an accountant of the owner. Don't think as if you are an accountant of the owner. You always think that you are an accountant of the business. So you record only those things what is happening in the business. So conclusion is, treat business and owner as two separate person. We have to, whenever we do accounting, we should always think business and owner as a two separate person. Business is completely separate and owner is completely separate. Then only you will be able to find out profit or loss of the business separately. So this particular rule or condition in accounts is called as business entity concept. In accounts, there are some set of rules on which entire accounting is based. Those are called as accounting concepts. Accounting concept means a set of rules. It's not a single rule, a set of rules on which entire accounting is based. So one of that rule is called as business entity concept, which says that business and owner should be treated as two separate person. So this is your concept number one, which says that treat owner and business as two separate person.